Hello, everyone. Welcome to Noble Gold Stream here with Micah and Josh Ward. We're excited to be here. We have a fun event planned for today, and I am excited to be here.
Thanks for having me, Josh. Yeah, looking forward to this segment. It's going to be informative. Let's go.
Absolutely looking forward to it. So let's jump right in. So, as we had the Super Bowl here recently, right? A lot of the trophies and the prizes for players have gold and silver in them. One of them being the Super Bowl rings, which is probably the most famous. And Micah, did you want to go over a little bit about the?
Yeah, so we just thought this would be fun, kind of on the heels of the Super Bowl 59 win, just to kind of talk about the medals that are used in various trophies and medals. So the Vince Lombardi Trophy, which goes to the Super Bowl winner, as you know, is made of sterling silver. That's not pure silver. That's 92.5% pure silver, or 92.5%. It's 3.2 kilos of sterling silver, and it's got an estimated value of about $50,000. And every year a new trophy is made for the winner that they get to keep. Some other fun championship trophies, like the Larry O'Brien NBA championship trophy. That one's made by Tiffany and Company. It's crafted also from sterling silver with a 24 karat gold overlay. And so that's valued at about $13,500, and it's kept by the winning team for a year until the championships the following year. Some other notable trophies include America's Cup, awarded in international yachting competitions, and the Borg Warner Trophy for the Indianapolis 500, and the Commissioner's Trophy for the MLB World Series. So silver across the board tends to be used a little bit more. It's used across global sports traditions and competitions worldwide. And we can get into some rings and some fun stats on rings as well, because the trophies are one thing, the rings are another. The team gets a trophy, but every player typically gets a ring. I don't know if you have anything to kind of comment first on just jewelry in general. Josh, I know you actually have a bit of a jeweler background, and precious metals background, of course, but why don't you just talk a little bit about jewelry and rings?
Sure. I mean, I hear clients say all the time that they bought a gold necklace as an investment, right? Or they bought a gold bracelet as an investment. And when you're buying jewelry, the norm here is triple key in the jewelry industry, which means that whatever the cost is to manufacture or produce that necklace or that bracelet, they're going to charge triple cost, triple key. So let's say there's $1,000 of gold in that bracelet. Well, they're going to charge at least $3,000 to $5,000 for that bracelet, right? And when you're talking about the high-end designers, it's even more at a skew here. So, I hear this a lot, people investing in chains or necklaces, and you really got to be careful, right? You're not buying it close to the spot price. You're paying a finished product price for it, which is something to think about.
Yeah, and just to touch on that quickly, Josh, that's kind of the opposite approach that we take here at Noble Gold with our clients. We want you to get as much metal for your money. We focus on bullion strictly. You can do coins and numismatics, but really where you're going to get the best bang for your buck is in getting as much metal as you can, bringing your cost per ounce down. We want to get you as close to spot as you can. So while cool and obviously a keepsake, these rings and jewelry in general, maybe not a great investment. You won't see price appreciation in line with spot price like you will with bullion. But some of the funner stuff we can talk about just with respect to rings, a lot of them are jewel encrusted, awarded to teams, coaching staff that commemorate their win, of course. There's one primary jeweler that does rings for all of the major leagues, which is Jostens. And so, championship rings kind of originated in the 20th century. The very first championship ring that was ever commissioned was by the Montreal Hockey Club. It's now the Montreal Canadiens. It's an NHL team, but at the time, the Montreal Hockey Club in 1893 created the first commemorative ring. Some fun facts. We know that the Golden State Warriors in 2022 for the NBA championship, their ring featured 16 carats of diamonds, which represented at that point their 16th playoff win. And alternatively, look at the Colorado Avalanche in 2022 for their Stanley Cup. That ring had 679 diamonds, 20 sapphires, and 40 rubies, showcasing each franchise's history and achievements. And so, championship rings can be valued anywhere between 5,000 and 300,000, depending on the team and the year, of course, and the popularity. But interestingly, I just saw this that Martellus Bennett, the tight end with the Patriots, he actually sold or auctioned off his 2016 Super Bowl win ring for $88,000. So, great investment, maybe more of a keepsake and a memento for sure, but not the same as protecting your wealth with physical gold and silver bullion like we offer. Okay.
That's correct. And a lot of the rings, the standard is about 10 karat or 14 karat, which is about half gold, half alloy, right? 60% gold, 40% alloy. So
Right.
you're not getting a whole lot of gold in that ring, right? Half of it is going to be silver, copper, nickel. So that's something to think about too, right? When you're buying bullion, when you're buying physical gold and silver, actual coins and bars, with the exception to a couple, it's 99.99% gold and silver. So it's
That's
either
right.
3 or 4 nines fine.
Yep. And a couple of those exceptions, worth mentioning in gold, we've got, as far as I can think about it, it's only 2 gold coins that are done in 22 karat, which is a little closer to 92% pure. So the Gold Eagle being one of them.
Mm-hmm.
And a lot of people don't know that.
Yeah.
We love selling eagles, gold and silver.
Most popular gold coin that we sell by far.
Bar none. But a lot of people think that it's 24 karat when I always kind of caution you, look, it's still a great investment. But gold eagles are 22 karat. The Krugerrand from South Africa is another example of a 22 karat gold ring. But everything else, especially bullion and bars, you're looking at 4 nines purity. So
that's correct.
karat.
And they do that for tradition. So from 1776 to 1933, the $20 Gold Eagle coins were made out of 22 karat as well, right? Because 24 karat gold is extremely soft and extremely malleable. So you don't want to be using a currency with a coin that's extremely soft and it wears off. And people were worried about taking a little bit of the gold off. So they made it a little bit stronger in 22 karat. It still has a full ounce of gold in that coin. It's a misnomer that I hear all the time. I don't want to get gold eagles because they're not pure gold. Well, that's not the reason. If you don't want to get them, that's fine. But that's not the reason not to get them, right? There's 1 ounce of pure gold in that coin and a couple grams of alloy of silver.
Yep. Right on. Cool. Hey, the more you know.
Yeah.
So speaking of gold, why don't we just sort of talk about price action, what we've been seeing? And obviously it's been a great year for gold. This time last year, Josh, as you know, we were looking at what, 21?
Around 2000. Yeah, a little over 2000 in the beginning of the year. Yeah.
And that was overhead resistance for gold for 4 years. So from 2020, after the COVID lockdowns and the kind of rush that we saw into gold and silver, gold couldn't get above that $2,100 range up until early 2024. So this time last year is $2,100, and then it broke out and has made new all-time highs pretty much all year. This chart that we're showing here, this is kind of a shorter term view. It's just the last, call it 8 months or so, but you can see what sort of happened with gold leading up to the election. It made a new all-time high at the end of October at around $2,800. And then, of course, with the fantastic victory of President Trump, what happened is the dollar, the US dollar, shot up like a hockey stick on the charts. So the dollar was strengthening relative to all other currencies globally because of a lot of the policies that he's been championing and we're seeing implemented now. But what we saw after the October high at 2,800 was a pretty sharp pullback. But what we've got here, this pattern, this sort of triangular wedge, we never negated the bull market. We held on to that lower line, which is known as support. So that trend support stayed intact. We touched it a couple times, mid-November, mid-December, and pretty much since the start of 2025, Josh, we've just been making new all-time highs pretty much every week. So we got over that $2,800 mark just a couple weeks ago, and now we're sitting at 2,900. So this is just a short-term chart of gold. We do know that lots of analysts are calling for much higher prices this year over the next 12 months, some as high as 4,000. Most are kind of ranging between the 3,400 to 3,500. But yeah, gold is just doing its job. It's hedging against inflation, hedging against uncertainty. And this is still, in my opinion, early innings for this precious metal bull market that we're in. It should last 5 or 10 years. Yeah, we're a few years into it. We got a lot of runway left. Do you have any comments about the price action on gold and what we're seeing?
Yeah, I mean, it's pretty rare that we see the dollar essentially at an all-time high and gold at an all-time high. So this
Great
is
point.
something that, I've been in the industry for 15 years and I've never seen it this way before. I can remember vividly back in 2008 to 2011, the last time gold hit its all-time high of $2,000, the US dollar index reached a low of 75. And right now we're about 108 on the US dollar index with gold at 2,900, right?
Yeah.
So with this being said, if we see the dollar fall dramatically, we could very easily see gold and silver rise exponentially, right?
That's a really, really fair point. So they're not positively correlated or negatively correlated. They don't move perfectly in tandem, meaning when the dollar is up, the metals are down, or vice versa. Normally, the relationship does work that way, but what we've seen, again, very unique, the dollar making new highs, gold making new highs. But what happens to gold when the dollar rolls over here? And there are a lot of analysts looking at the dollar saying, quite possible that we see a kind of a yearly high. We get into that 115 to 116 range. But then there's also kind of a level around 106 that if it breaks down below that, we probably get to 100 and then could see ourselves in the 90s. So if the US dollar is breaking down relative to other currencies, you can expect the price of gold in US dollars to only surge. But a higher dollar doesn't actually mean that gold can't go higher. And clearly the last few months have been proving that.
That's exactly right.
Yeah, great. Gold, anything else to really add there, Josh, just with what we're seeing and maybe?
Yeah, I really kind of wanted to take some time to go over the gold to silver ratio. This is something that I follow pretty much on a daily basis. As a gold and silver investor, you should probably be looking at it as well. So this is how many ounces of silver buys you 1 ounce of gold. Okay. And the reason why this is important is you can kind of see historically relative to gold if silver is undervalued, overvalued. And historically, so from 1776 to 1933, it was pegged at 20 to 1. So 20 ounces of 20 ounces of silver buys you 1 ounce of gold.
Yeah.
Okay. And it was like that for hundreds of years. And today we're pushing 90 to 1. Okay. And the highest it's ever been is about 120 to 1 during the height of Corona. The first couple months of Corona,
Very
we saw
briefly.
it get all the way up to 120. So what it means, the long and the short of it means is that silver has essentially never been cheaper priced in gold for the last 5,000 years, right? I mean, you're getting as many ounces of silver as you possibly can during the last 3,000 years, right? So if you take that, to me, that is a very, very biggish, bullish sign for silver. It means that the sentiment on silver has been lagging. It's kind of been a laggard, right? I mean, I thought once we see $3,000 gold, I thought we would see $50 silver. And a lot of other analysts and economists were expecting that. And we haven't seen that, right? Silver is holding on at about 32, well above its resistance level of about 30.
Yeah.
Which is nice to see, but I think we should see that silver to gold ratio closer to 40 to 50 to 1.
Yeah. I agree with you there. I actually think that longer term will probably take out the low, which was from the aftermath of 2008.
Yeah.
So we got to a 30 to 1 ratio in 2011, but let's just take one step back. In 2007, stock market at all-time highs, gold at all-time highs, eerily similar to what we're seeing now. And I actually think it's a bit of a foreboding element where gold shouldn't be doing as well as it is, and it shouldn't be making all-time highs while alongside the stock market, unless there's a very tangible kind of economic uncertainty across the globe. And we can look at other charts, like with China, for example, and then pouring in to gold. But we saw that gold made new all-time highs alongside the stock market prior to 2008. When 2008 hit, the stock market crashed by 50%. Well, in the 3 years after, gold tripled, but silver 8.5 times. So that's what got the ratio down to a 30 to 1 price ratio. Right now we're at a 90 to 1. So what I've been saying is with the possibility of a coming recession and a very significant market crash, we could see a drop in the gold to silver ratio and the outperformance of silver versus gold, getting us at least back to that 2030, or sorry, that 30 to 1 2011 low. That would mean that if you had the same amount of money, Josh, and you bought 90 ounces of silver versus that 1 ounce of gold, price being the same, if you held those 90 ounces of silver for the next, call it 3 to 5 years, and we return to that 30 to 1 on the gold to silver ratio, your 90 ounces are now going to yield you 3 ounces of gold if you sold them.
That's correct.
So the same amount of money being equal, it's better placed now in silver at these historic lows or these historic undervaluations, and we're likely to see a lot of great outperformance in silver from here on forward. Yeah,
that's right.
For sure.
That's right. And we don't want to leave out platinum too. This is something that has been gaining a lot of attention as well. I'm hearing a lot of it, a lot of enthusiasm with investors. So when I got into the gold business, the price of platinum was double the price of gold. Okay. Right now, the price of platinum is about a third of the price of gold. So 15 years ago or so, you could buy 2 ounces of gold for 1 ounce of platinum. And right now you can buy 3 ounces of platinum for 1 ounce of gold. So everything is askew right now. And platinum, a lot of people don't realize, is actually 10 to 20 times rarer than gold on this planet. There's 10 to 20 times more gold on this planet than there is platinum. There's no reason why it should be selling at such a huge discount to gold.
That's right. Yeah. And what I like to kind of remind people of, and they see this all over the place, when you go to a service-based business, Josh, car wash, salon, you've got packages, the platinum package, the gold package, the silver package, the bronze. And platinum is always the best because it was always the most expensive metal up until about 2009. And like you said, at its peak, it was 2.5 times more valuable than gold. Well, right now it's $1,000 with gold approaching 3,000. It's just unbelievably cheap. Now, mind you, it doesn't have the history of gold and silver of being a monetary metal, right? It has not played a role in our currency like gold and silver have, but it is extremely rare. It is a precious metal, but it's used primarily industrially. Now we know it's got a lot of great applications, especially with respect to nuclear energy and those types of things with fission reactors. So demand's not going away. Supply is extremely hard to find. The price right now makes no sense. And so just in speaking of value, buy what's cheap, not what's expensive. There's certainly a big value play for platinum with our clients right now as well.
That's exactly right. Yeah. And one of the reasons why we didn't see platinum as a monetary metal is because we didn't have the technology at the time. So platinum has a melting point almost double that of gold. So you have to heat it up temperature-wise twice as much to be able to melt it and refine it and assay it. So that's part of the reason why you don't see a whole lot of platinum coins out there, platinum bars out there. To manufacture platinum, to assay it, to refine it, to mint it into coins and bars is very costly. And there's not a lot of mines that have the availability to do it. Right? 100 years ago, you couldn't platinum. 150 years ago, I should say, platinum didn't exist because we didn't have the technology to get the temperature that high. So platinum has really, really, a lot of people hear about it in the jewelry industry with designer jewelry and whatnot. A lot of ladies have their wedding rings made in platinum, and I am extremely bullish on platinum.
Yeah, me too. Yeah, I would think, and this is speculation, we don't have crystal balls, but I would think that over the next few years, as we kind of come into what's actually generally a commodity bull market, it's not just gold and silver that are going up. Actually, a lot of commodities are going to perform well in an inflationary environment. And I think the rarer the commodity, the better it'll do. Maybe not right away, but again, with kind of a longer term horizon, which we recommend to our clients anyway. Gold and silver are not a trade, especially not physical bullion. This is a longer term buy and hold. But I would think that platinum will at least get back to par with gold at some point in time, which from here means, tripling.
A 300% gain, yeah.
So, time will tell, but it's dirt cheap right now.
That's right.
So, Josh, anything on the metals that you'd like to cover that we didn't talk, or maybe we switch over to
something that
markets?
It's correlated here. I just read an article about Trump stopping the making of the penny. Okay.
Yep.
And I guess in the US here, it cost us about 2 cents to make every penny.
Yep.
And something interesting about the penny is if you have, a penny used to be made out of copper, right? 95% copper.
Mm.
And that was 1986 and earlier, which is actually worth about 3 to 4 cents today for a
Mm.
copper penny, right? So if you
Interesting.
have a penny from 1986 or earlier, you can triple your money by just putting it in your safe, right? Because it's worth 3 to 4 cents today. So Trump is stopping the production of the penny because we're losing tens, hundreds of millions of dollars making these pennies. And it's something that we could see with other coins too, right? What if the nickel? What if it's costing us 7 cents to make a nickel? I mean, they've taken all of the actual base metal out of these coins. They're all copper clad. They're all nickel clad. They don't have any real valuable metal in them, right? If you
Mm.
take an old quarter and a new quarter, 1967 or 1964 quarter, that's worth about $4 or $5 today, or a 1965 quarter that's still worth a quarter,
Right.
right? Because
Right.
it
Well,
doesn't have
just
that
like,
90% of silver in it.
yep, exactly. Old coinage used to be 90% silver. It's funny how they're making that move. I think it obviously makes economic sense. It's something actually that the government of Canada did about 10 years ago.
Yes.
So they abolished the penny about 10 years ago for the same reasons, right? It just cost them 2 to 3 times more to make than it actually was worth. So, let's actually maybe talk about, just in that context, some of the other interesting stuff that's coming out of the Trump administration. He's really just guns a-blazing. 3 weeks in, we've seen more work from this guy in these 3 weeks than probably the whole 4 years that Biden was there. This breakneck pace is lovely to see. I think he's going to continue that. I think the strategy is actually to keep Democrats basically on their toes. They don't even know what to be mad about, because before they can say something about the current issue at hand, they're on to the next. And
Yes.
so I actually think it's a brilliant strategy, communications and otherwise, to just hammer out everything that he promised that he would do. But one of the larger, kind of more, let's say, potentially economically uh, volatile topics have been tariffs. And as you know, tariffs could potentially impact the precious metal space. And what we've seen over the last few weeks, kind of in anticipation of 25% tariffs on Mexico and Canada, is that these borrowing rates, or these lease rates, to be able to get metal out of the commodity exchanges. There's one major commodity exchange in London, there's one in New York. So the amount of metal that's been flying out of London to come home into the US prior to the tariffs being enacted is just off the charts. So we've seen, the lease rates basically quadruple in the last couple of weeks. There are some bigger implications for these tariffs, as bullion dealers, as precious metals investors, because what that means is, with the amount of silver, especially, that comes into the U.S. from both Canada and Mexico, Mexico being the biggest silver producer in the world, there could be carve outs for gold and silver just across the board. We may have nothing to worry about, but obviously, global markets are positioning for them to be included in that. What that would mean is bringing in a Royal Canadian maple coin, right? Beautiful silver coin. I love selling them. But if all of a sudden bringing them in from the Royal Mint costs an additional 25%, that adds $7
That's right.
to the price of silver.
And we've
And
already seen that, right? We've already seen, just in our day-to-day business, the price of the Canadian silver maple leaves now are more than the silver eagles,
yeah,
which is the first. I've never seen this before in the industry,
never,
right? Especially
yeah,
in America here, we're partial towards the American silver eagles, right?
yeah,
A lot of Americans don't want a coin with a king or queen on it. That's especially in America here, right? That's
yeah,
very, very popular. So
exactly.
a lot of people stick with the 1 ounce rounds or the American silver eagles. Those are the two most popular 1 ounce silver coins that we offer here.
Right. And what I think that does, kind of inadvertently, Josh, like you said, is, there's already an appetite for American made silver buffalo rounds, American eagles. We've got a lot of domestic bullion product. But if we're going to see any silver in general that's coming from ore that was made and pulled out of the ground in Mexico, that could have an across the board price increase for all silver products.
That's right.
But we will probably see a depletion of domestic domestically produced bullion, kind of get it while you can type of thing. So again, there could be carve outs. We don't know the details of what will exactly be impacted by these tariffs. They've been delayed, I think, now for another month or so, or 3.5 weeks at this point. But obviously, markets are beginning to get a little bit nervous, and I think that it's time to act, right? Don't wait for these to come in and to kind of slap gold and silver in the face. Get your gold and silver now while prices are still, especially in the case of silver, like we talked about, extremely cheap.
Yeah, that's exactly. I mean, we could see overnight a 25% increase in the cost of these coins and bars coming from Mexico and coming from Canada.
That would add $400 to the price of silver.
Yeah.
Right away. Right, it'd add $7
to the price of gold, right? And then $7 to the price of silver.
Pardon me. Yeah.
Overnight.
Exactly.
Overnight, right? I mean, you could, and that's what we're starting to see now. Before the tariffs take into effect, before all of this comes to fruition, we're seeing the market change dramatically, right? We're noticing the premiums on metals. Like right now, I have never seen the premiums on gold and silver as low as they are now, right? So during the height of the coronavirus, we saw the mine shut down. We saw the mint shut down. They were not producing gold and silver coins or rounds.
Yeah.
Right. And the demand was surging. The retail demand was surging during that time. So we saw shortages in silver and gold. We saw high premiums. We saw the silver eagle premium get up to all the way about $18 over the spot price during that time. And it was amazing. You couldn't get it, right? No matter what you wanted to pay for it, you couldn't get it on hand. And we experienced that here at Noble, right? It was for a year and a half. It was tough to get your hands on metals on any large quantities.
Yeah. Yeah. And what I say to clients is, you call me now and it's, what do you want? I've got it all. But if you're waiting for something to happen, some type of crisis that kind of drives all of this buying FOMO to us, at that point, it could be a conversation about like, well, here's what I got, not what do you want? And I'd really prefer for clients to be able to have, all of our inventory mostly in stock, which is exactly, we are seeing fluctuations in premiums day to day and week to week, just because the industry is now trying to figure out what's going on and what direction, these tariffs are going to be in. But
yeah, and we've seen retail demand fall off a bit, but
in the West,
in the West at least, so it's a very good point. In the West, we've seen some retail demand fall off. We've seen premiums come down, but you look at the big institutional buying, you look at the central banks, other countries, they're buying gold in record amounts.
Absolutely. Okay. Yep. And just to kind of add to that, Josh, China in particular cannot get enough precious metal, gold and silver both. And you have to think the context is a little bit different from us. So we've got housing market at all-time highs, stock market at all-time highs, but China, conversely, is in a massive stock market crash and housing market crash. So they're kind of in the middle of an 08 type correction. So the only game in town as a Chinese investor, the only protection for your wealth are physical gold and silver. And, from brick and mortar kind of retail shops, I'm seeing news articles and stuff every day. They cannot keep it in stock. The Shanghai bullion exchange or gold exchange, the Chinese government just allowed Chinese insurance companies to start buying, and they're now kind of mixing into the market. Look at this chart here, which just shows that trading activity in general for gold is at all-time highs, unprecedented levels, and it has no signs of slowing down. And so they think that we're kind of crazy. There are more sellers than buyers right now in America, or in, again, the Western retail markets. We're at all-time highs. Silver's done pretty well. Both metals have returned over 40% in the last 12 months. But that shouldn't be a reason to sell. That should be a reason to hold. And frankly, the trajectory we're on is going to be a lot higher for both gold and silver. So China's gobbling it up. They can't get enough. They have an insatiable appetite. They're a much larger country than we are. And, we're almost in this kind of complacent mode where, again, stock market's at pretty much all-time highs, housing market's at all-time highs. And unfortunately, with investor sentiment in general, is, people don't really act until there's a reason to. So I urge all my clients and all of our listeners to kind of take a proactive approach. If your 401k or IRA have never been larger than they are now, or based on your Q4 2024 statement at the end of December, that's pretty much where everyone's at. They're happy with that. I think that's great, but it is time to crystallize some of your wealth and to take some chips off the table and start your allocation to gold and silver. We've got a term that Colin uses that I love, which is, it's a value lock. You're never going to lose purchasing power on any amount of money that you take from your portfolio and put into gold and silver. You can't, not over the long haul. Sure, it ebbs and flows like any market, day to day, month to month. But our clients should consider that we have all-time highs in housing, all-time highs in the stock market. We've never had better times, but we are seeing recessionary indicators flash across the board. And I noted earlier, gold's doing similar things now that it did in 2007 before the global financial crisis. So let's not wait for a 20, 30%. And that's just a garden variety correction. We could easily see one of those in 2025, Josh. But with valuations where they are, you can't rule out a 50% or more, like a 2008 or even the 2000 .com bubble, right? And sort of kind of ramble on here, but we're seeing a lot of parallels too now with AI and tech that we did in 2000. It's just eerily similar. So again,
like the Magnificent Seven stocks, right? I mean, think about the
Exactly.
S&P and what the Magnificent Seven stocks have done for the market, right? In the last few years.
Exactly. This chart here, I'll just speak to it really quickly, not to cut you off, but that blue line at the top, that shows you the total growth that just 7 stocks are responsible for in the S&P 500. So 7 stocks are responsible for 60% of their returns over the last 2 years. Okay, now that's a very narrow breadth. When you have a lot of companies participating in an upward trend or in a bull market, you've got broad breadth, but we've got very narrow breadth where it's just these 7 stocks that are pulling more than their fair share, and they're accounting for 60% of all the growth in the S&P 500. Now that red line below it, sitting at about 30%, that's how much these 7 companies have in terms of their total market cap of the entire S&P 500. So 7 companies are worth 30% of an index that has, another 493 companies in it. Okay. Right. So what they've done is they've disproportionately carried the market up over the last couple of years, but we're seeing now the types of things, earnings coming in lower than projected, competition in the AI space, in particular this DeepSeek revelation and the impacts that had on NVIDIA a couple weeks ago. We are seeing all of the early signs of a potential correction in tech, and in particular these Mag 7, and what kind of disproportionately affects them positively to the upside, or the markets to the upside, will do kind of the same on the downside. It'll magnify losses to the downside. So again, the only point I'm trying to make is be proactive with your wealth protection management strategies.
That's right. I mean, there's the time to take chips off the table is now, right? I mean, that's the reality of it. You'd rather be 6 months early than a day late.
I love that expression. Yeah.
You don't have profits in the stock market until you sell. Okay. It's just paper gains until you sell. All right. We could see a pullback in the market, and people who don't look at their accounts every day, right? They can look at it from 1 month to the next, and they could see a 10, 20, 30% decline. I remember back in Corona times when we saw the stock market drop dramatically, we had clients that were transferring money, right? And by the time they got into a cash position for us to be able to transfer the IRA, I saw 10, 20, even 30% declines. So a gentleman had $100,000 that he wanted to transfer. It took him a week to get into cash. Now it's $80,000. Now it's $85,000.
Oh yeah, that's reminiscent of even 2022. And funny because we can compare what's happening now to 2000. We can compare what's happening now to 2008. But even 2020 and 2021, we had a huge surge in the stock market once all the money was pouring in from the Fed. They'd lowered rates to basically zero. They were cutting stimulus checks to everyone and their dog. And that shot the markets up in the latter half of 2020 and 2021. But people seem to have already forgotten that 2022 stocks and bonds were down 20 to 30%. And I remember people calling me in a panic, wanting to roll over their IRAs. And, they take couple of weeks from front to back, right? From when you want to get started to when you're buying your metal, and you'd see 10, 20% fluctuations in that 2-week period, right? So again, don't call us in a panic if you can avoid it. And 6 months early is a whole lot better than a day late.
That's right. That's right.
So we've got
And
a
I get the question,
question.
Mike, a lot. I have a lot of people. Oh, I own gold. I have gold ETFs, right?
Hmm,
I have gold stocks. I have gold shares. I have the GLD, the SLV, and what you have is exposure to gold, to the gold and silver market, right? You don't have physical metals. You cannot trade an ETF. You cannot trade a gold certificate for anything, right? It's
hmm,
just paper exposure that gets
right,
paid out in dollars. Um, as opposed to owning physical metals that you can barter with, you can trade with, you can borrow against, right? I mean, the gold and silver is a physical, tangible asset, something that you can hold in your hands, right? It's not a zero on a computer screen like a gold ETF or a gold stock. So that's something to really understand for our listeners here, right? When people own gold stocks or gold ETFs, it's just exposure to gold. They don't own the physical metal.
right. Yeah, and just to add to that, Josh, what I say too is you've got exposure to the price action. So if gold's up 20%, the ETF is up 20%, and your bullion's up 20%. But you own dollars still. You just have a financialized instrument that's dollar based. So if you're seeing 10% inflation over the course of that rise of 20%, your net gain is actually the rate of inflation minus your performance, which it's up 20%, but you're really only up 10. So the other thing with ETFs is that they're not going to hedge you against what's called counterparty risk. Counterparty risk is when that asset or that instrument belongs to a BlackRock or a Vanguard, one of these big financial institutions. Financial institutions themselves pose risks. We know that from the spring of 2023, Josh, when we saw 3 or 4 banks go up in smoke in a matter of 1 or 2 weeks.
That's correct.
So the beauty of gold and silver, of physical metals, is you don't hold dollars. You're out of the currency itself. You hold a physical, tangible commodity. You have no counterparty risk. You're outside of the banking system in its entirety. So if any bank crashes, the stock market, circuit breakers, it's locked down, you can't get into your trading account, you don't worry about those things. So there's a time and a place for stocks, and there's a time and a place for physical, tangible assets in everybody's portfolio.
That's it. Okay. And we're going to go to a quick commercial here. We'll be right back.
Talking to people today about their retirement accounts. Sir, excuse me.
Yeah.
Do you have a retirement account?
Yeah, I've got a TSP from my old government job.
How's that doing?
I'm forgetting about it. I can't contribute to it. There are fees to get the funds, and the investment options are limited, so the money's just stuck.
How about a Gold IRA?
I can do that?
Absolutely. You can roll it into a Gold IRA, and you have all the same tax advantages as a TSP, but with more flexibility. And you can put physical gold and silver in your retirement account.
I'm taking control with Noble Gold Investments.
Your retirement, your rule.
All right. We're back on here.
And that's a pretty salient point as well. Just talking about TSPs, Josh, for a minute. We know there are a lot of changes coming with respect to federal workers, and hearts go out to those individuals who are impacted by some of these changes. Now, I think everyone will agree, definitely some changes that need to be made there. A lot of waste, a lot of misappropriated funds. We're finding more out every day about some of the waste and fraud and stuff that's been going on. But the long-term benefit of reining in the federal government will be economic prosperity and growth and a better economy. But what we've got now are tens of thousands of federal workers who are going to be looking for jobs at a time when unemployment is actually starting to tick up. One of the things that I think is not quite being priced in by the stock market is the fact that with already rising unemployment, we're adding a lot of numbers to that. So that's one of the big recessionary signals that's flashing. You could actually see some recessionary kind of impulses from that. And I think the stock market could reprice accordingly. But for those who have TSPs that weren't able to move them, because every 401k, every TSP, every employer plan essentially has rules around what you can do as long as you're actively serving in that role, there are going to be a lot of TSPs that are actually able to be moved now at a time when they otherwise couldn't. If they were going to be there for life, can't do anything until you retire or are 65. But some of the opportunities there are people who kind of see these things that we're talking about and now have a TSP that can be rolled over, it's a really great time and actually a good opportunity for them.
Yeah, and we saw a lot of that during COVID, right? When people were laid off or furloughed, they were able to move their retirement accounts, right? A lot of people don't, when you work for an employer and you have a 401k, you cannot just roll over that account at will whenever you want, right? The employer is making money on your 401k account. There's a lot of science behind it, a lot of money being made behind it. So you cannot just take your 401k and roll it over into an IRA at will, right? But once you no longer work there or you hit the age of 59 and a half, you can. You're no longer stuck in that 401k plan, right? And as you know, I mean, I've experienced this in the past where you have a very limited amount of stocks, bonds, mutual funds that you could hold in a 401k. And once you leave that employer, for the most part, the fees go up big time, right? When you're part of an organization, a 401k plan, usually the fees are relatively low, right? But once you leave that employer, you're no longer part of that special rate and your fees go up significantly. And a lot of people don't realize this because they take it, when you get your statements, they've taken their fees out of it and they just see their statement that it's up or down a little bit, right? Nobody even realizes that they're paying all these fees for an instrument that's extremely limited, right? So I think it's wise to look at all of your options here when it comes to leaving a TSP or leaving a 401k. I mean, do you want to leave your retirement in the government's hands, right? Like a case in point for a TSP. Do you think the government's going to invest your money, your retirement better than you can?
Right.
I don't think so.
Yeah. Well, I think those are all important points to drive home, Josh. I agree with you. Absolutely. Okay. Well, so I think if I were to kind of leave our listeners with a few kind of parting thoughts is, we're coming into a long-term precious metals bull market. We are likely to see at some point, and that's the $1 trillion question. No one can tell you when the stock market is going to correct. No one can tell you when the capital rotation is going to happen, where everyone goes from stocks to what's safe and how you're going to protect yourself. So again, emphasizing proactiveness, but also looking at gold and silver as being a kind of a longer term investment. And then with respect to the country, we're seeing great things out of the Trump administration. Very excited. Every day there's something new to be happy about. But we will likely see some short-term pain in order to get on the right track for a long-term gain. And I think Trump actually knows that. I think the speed at which he's cranking out a lot of these changes is to kind of usher in that period of pain sooner rather than later, so that he can deal with it, get it out of the way, and get us back on track as a country and as a nation. So Josh, I don't know if you have any kind of closing thoughts to help us wrap up here.
Yeah, no, I think you hit the nail on the head here, Micah. I mean, we're here to help here at Noble Gold, right? Any questions you have, anything that comes up that doesn't make sense, you want to go through what your avenues are, what your different options are, give us a call at Noble Gold, 877-646-5347. Go to our website, subscribe to our different channels so you can get this valuable information. We have a really good gold and silver guide that we send for free to all of our clients. We're here to help day and night. Any questions you have, you let us know. That's what we're here for.
Great.
Okay. And we'll see you guys next time.
Thanks, Josh.